Hello, friends. I thought I'll do a quick one on, commitment of traders. I think there's a lot of inquiry and a lot of interest around what COT is and other things, and a lot of demand around that. So, and also finally, gocharting has the COT module available for users. So, we'll just do a quick one. Also, before I start, I must say that my friend Rafaji has done a video already around that. I'll post that link as well as part of this video, and he's done a fairly reasonable explanation of what it is. I'll also try to add on few perspectives for us, for you to sort of absorb and try and take that as a information. Okay. So if you see originally, okay, if I just want to hear the what is the commitment of trader mean as a basic word. I mean, the word is very standalone and it makes a lot of meaning for itself. It essentially says, how much traders are committed to a position or how much traders are committed to an inventory or a position, right? That's the whole underlying premise of that. Okay. So the originally this was, the way it has been used all through the decades and for a many number of years is a weekly report that comes out which says about how many if in which 20 or more traders hold positions equal to the reporting levels established. So there is a threshold level established by the CFTC. So in any of these commodities, mostly in the commodities, if the traders are holding positions beyond that threshold level, 20 or more traders, so that way it gives you an idea of, yes, more traders are committed to a long inventory or a short inventory in a certain commodity, right? Okay, so that was the whole premise of how COT has been used over the years, over the decades. Okay, and this report is still actually comes out and it is still shared. But having said that, with the advent of order flow, the interpretation or the way we are trying to interpret commitment of traders is a lot different. And also we are trying to not look at a weekly basis but looking at a much more microscopic level, at a candle by candle basis, trying to understand the intent of the intraday players, the HFT players, the algo players, and the short term traders, scalpers, etc., to figure out how they are positioning themselves for a micro trend or an intraday trend in the day. Okay, now from that perspective, what COT high stands for is the cumulative delta since the market makes a new high in the candle. So every time a new high is made, it is reset. So it's the delta between this high and the close of the candle. Similarly, COT low is since the market makes a new low in the candle and the delta in between this low and the close of the candle. So that is how this information is sort of calculated, and basis that we try to make different sorts of interpretations of this information. Okay, where you will find this information, it is in the you go to bar stats. Okay, when you go to your bar statistics panel, which is in the lower bottom, okay, you have the COT high and the COT low now available. Okay, the first one is the COT high, the lower one is the COT low. So that is an information that is available in your bar stats when you go there. Okay, I'll also try to explain what it sort of stands for. Okay, if you see what it stands for is this, your I'll just try to explain this module quickly so that you really understand it very clearly. Okay, so if you see, this is a candle, right? Let's say this is a green candle which is forming. Okay, this is a green candle which is forming, and uh, during this, let's say this is a 5-minute candle, right? This is a 5-minute candle. During this candle journey, the price probably starts at this open candle open, it goes to some midpoint, it comes within the 5 minute I'm talking about. Okay, it comes, makes a low which marks as the low of the candle, then goes probably to the other side which marks as the high of the candle, and then probably closes here which is also equal to the close of the candle, right? So this is the candle journey within that 5 minute time frame. Okay, now within that candle journey, it will make a low and it will make a high and it will have a close. Okay, so now let's think about COT high. Okay, COT high is delta at the high and the difference at the delta at the close. So candle delta is what you see at the bottom of the delta each candle, right? The candle delta for that 5 minute candle, we'll see, let's say delta is 10k here, right? So candle delta is what we see, and delta, whatever delta within that journey, or it was high at the high, let's say it was a 12k. Okay, then the difference is 12k minus 10k, which is 2k. Okay, that is the COT high. So think of COT high, if you want to remember it easily, I think the way I try to remember it is, you know COT from high, COT from low. Use the word from in between, from high, from low. So then you will remember it easily. Okay, so similarly, let's say the delta at the low was minus 5k. Okay, because sellers were coming in and then the low will generally have a lower delta, and then the delta at close is still 10K. So the difference here is again 15K, right? So that difference is becomes your caught low. Okay, so this is how caught is interpreted. I'll again repeat, this is within the 5 minute candle. Okay, you will have a low made, which let's say the low was, during that, let's say during the second minute, the low is made, minute two, during let's say minute four, the high is made. Okay, and then 5 minute is this is the close. So your delta at low minus delta at 5 is the caught, the difference is the caught low. Delta at high minus difference at close is the caught high. So caught from high, caught from low. Okay, that is the core interpretation. Okay, generally, what is your expectation out of this if you think of it as a trader? If low, low, I had sellers minus 5K, let's say, coming in. My expectation is if market has to trend up, if market has to trend up, then the delta caught low should be positive. The caught low should be positive because I expect buyers to come in after this period till the close of the candle, right? Okay, that's why caught low should be positive. Similarly, I would expect caught high to be negative because caught from high, because highest point, if I'm expecting market to trend down, let's say, because that means what, there were buyers here, then sellers should have stepped in. Okay, so eventually the close delta should be lower than the high delta at high, so I'd expect this to be negative, okay, in the period of the candle. Okay, and basis that we try to make different interpretations of, identifying trends with COT, identifying trap traders with COT, etc. I'll share a few examples quickly. Okay, I don't want to be an elaborate session. I think we'll cover more live examples as we see, this evolving and we trade together in a group. Okay, so now you see we are trying to pick the trend up market, trend follow through with COT. Okay, so in this case we focus on the COT low. When you want to see trend up, you want to focus on the COT low. Okay, and you want to see trend down, you want to focus on the COT high. So COT low when you want to see trend up. Okay, and COT high when you want to see trend down. Okay, that is what you want to focus on. Okay, now in this case what you're seeing is, market made a low here, right? This lower panel is the caught low. Okay, this is the caught low. Okay, now what I want to ensure is every time within each candle when market makes a low price, I want buyers to step in. I want that buyers to have continuity in this trend, right? So what we see is, fairly consistent got low positive delta values. Okay, so that means, each candle buyers are coming in, and there is not much deviation, which gives you a good hint that the trend will likely to continue on the upside. Okay, so this is how you're using the trend in caught low. Similarly, if you had to do caught high on the other side, you want to see what, if you want to see caught high, you want to see that, okay, caught high, relatively negative values, minus, and as the trend goes down, that way it will give you an indication that, sellers are coming in every time the candle high comes. After that, sellers are coming in, so sellers are selling the candle highs, basically the candle highs, not the, so that way there's a consistent selling activity happening in the market. Okay, that way you'll get a trend down information. Okay, clear. Now I'll say share another scenario where we try to pick trap traders. Okay, and trap traders, what we do is, caught high massive value. So means all buying happened after the high was made. If you see caught high means caught from high, I'm talking about, right? Caught high means we explained in the past. If you see a very high value at caught high and the candle not being supportive, that means what? Price made a high, all, then price closed here. Okay, and the COT is positive. That means what? Maybe the COT was 10K here and the COT is now, let's say, 50K here. That means was 40K buyers have come in, but the price still closed low. Okay, so that means, indicates aggressive buyers have failed in the market and these buyers are now trapped. Okay, see this example, market opened here. Okay, and the caught high in this case is 100K. Okay, which is essentially means, after the high was made till the close, all the buying has happened. It was, all the buying has happened after the high was made till the close. Despite all the buy happening, price closed weaker. That means what, all these buyers are now trapped at a price which is higher than this close, and once the market start correcting, they would want to exit. So a very good sign that, okay, I can short this market and try to capture a down move here. Okay, And these two scenarios are the most clearest scenarios to start with. I think you evolve this information, you evolve this understanding more as you observe. For now, try to trade those two scenarios if you at all are interested. Okay, and wish you good luck. Hope you love this.